good day, wherever you might be. Thanks so much for joining us for another Metals Investor Forum webinar. I love that we have the opportunity to do these in between the conferences because there's always lots going on. Companies have news to share all the time, and regardless of the sideways or muddled state of the market, the news can be important. So it's important to keep up with these stocks, I think. I mean, maybe that's because it's my full-time job, but I think it's very important to keep up with these stocks so we know what to look for, what to be behind, what stocks we really like when the tide turns in our favor. So we have a great set of companies today. I'm going to host the first half of the webinar, and I have two companies here presenting with me today, Sanu Gold and Azimut Exploration. And then after that, Peter will take over. So without further ado, I'm going to do a little presentation. I'm not going to dive in great depth into things, but here we go. I mean, you can see the title of my talk, Still Muddling Along. Not the most ingenious or exciting title, excuse me, but the markets are not particularly exciting right now for metals investors, at least. And I mean, I think that's sort of a kind way of phrasing the state of the markets right now. They're terrible. I hate updating my portfolio right now. So where are we? Why are we here? Where are we going? That's what matters, right? It always matters what's going to happen next. We are still in the situation where confusion is the thing. We don't know. I mean, I think it is gradually transitioning. I think even 2 months ago, there was more confusion. And when there's more confusion, that meant that there was more focus on recession risk. There was a lot, even 2 months ago, like I say, there was a lot of investors who I think their primary thing was being wary of a recession. That is still very much a factor in the markets right now. There's a huge, I'll finish with a slide that shows the amount of money that's sitting in money market funds, that's just sitting on the sidelines because investors don't know what is going to happen next. So I'm starting with confusion, and I'm going to end with a demonstration of the confusion. Investors still really don't know whether we are going to end in a recession or in a soft landing. The confusion is largely because, well, we've been in this what's going to happen state for quite a long time. And in this what's going to happen state, it's very interesting that the hard data, the numbers about inventories, prices, inflation, jobs, like the hard data actually keeps looking pretty darn good. But the soft data, the survey-based data, how people feel about things, where people think things are going, continues to be very rough. And this has been a theme for half a year now. It's actually been quite startling, the divergence between these data points. I have a few examples here. The Philadelphia Fed non-manufacturing survey. The top line is the soft survey. What is your assessment of the general business activity for your region? Terrible number. The numbers all below that are the hard data, all pretty darn good numbers. So just a good example of how the hard and soft data keep conflicting. And that means that we continue to not know what is going on. In terms of hard data, I mean, the one indicator that has been flashing recession for a long time now is the inversion of the yield curve. And I say a long time. We started talking about this a year ago. That's a long time. It isn't actually a crazy long time. The average duration between a yield curve inversion and a recession is 11 months. And that's what we're hitting right now. So it actually hasn't been that long, but it feels like a really long time in today's world of rapid fire news. When I show this slide, I like to mention, give credit where it's due, which is that Tavi Costa of Crescat Capital did a great assessment, trying to figure out if he could use yield curve inversion data historically to find out timing. Is there any way that we can manipulate the data that lets us know when a recession is going to happen when you look at yield curves? And what he found was when 70% of the yield curves out there around US treasuries, right? Because yield curves compare bonds of different durations. And so you can compare the 6 month and the 10 year, you can compare the 6 month and the 5 year, you can compare the 6 month and the 3 year, the 2 year, and then all of those combinations and permutations. So there's lots of different yield curves. When 70% of those curves invert, that's when a recession reliably starts immediately. Guess what? We're there. But the recession still hasn't happened. If the recession does happen, we know that recessions are good for gold. This is the subsequent slide that Tabby likes to show after showing that 70% of yield curve inversions slide. And it shows that when you get that 70% of the yield curves inverted, then you get the two best occurrences for gold are shown in the blue. The other 4 recessions that have happened since the 1970s, the performance for gold is shown in yellow, and the green shows where we are right now. So, it's not just the performance for gold, it's gold against the S&P, because of course the S&P will go down because we're talking about a recession, and gold will go up. So that's why these numbers are so fantastic. That's why recessions are good for gold. It is the classic hedge. But where is this darn recession? 70% of the yield curves are inverted. Why don't we have a recession? Well, the data just keeps saying that that's not where we are. Sure, there's some data points that come in to the contrary. We get data points that are weak, but the majority of them are pretty darn good. So that keeps pushing us towards what I like to now call the unicorn, right? I used to discount the soft landing because I was like, as if that's ever going to happen. A soft landing is really perfection, which is, it describes the situation where inflation gets under control. So inflation keeps falling and falls to the point where it is considered under control, and therefore rates can gradually come down, but the economy does well while that's happening. That's literally perfection. That's what a soft landing describes. It's sort of a nebulous way of saying, or sort of sidestepping the fact that what you're describing is, we really want perfection. So I'm calling the soft landing kind of the unicorn outcome. Lately, the longer we keep getting good hard data and inflation feels like it's topping, yes, there's probably more rate hikes to come, but the inflation pattern looks good. The unicorn has kind of been sighted, but we don't have confidence that we're there yet. So if we're not going to get a recession and we're not there at the confidence that we are in a soft landing, we haven't achieved perfection yet, then we're in the more of the same scenario where inflation is like where it is. Maybe it's, coming down slightly. It's just sort of where it is, but rates have to stay high or continue rising. That's the status quo situation that we are in. Now, I do think it's reasonable to say that gold works in both of those scenarios. Well, gold works in all of those scenarios. It works in the recession. I already described that. It works in the perfection scenario as well, not in an outstanding way. There isn't, in a perfection scenario, in that perfect soft landing scenario, we end up going into a strong market, right? We end up in an economic growth scenario and strong stock market. In that stock market, in that growth phase, I think that base metals are set up to do very well because growth needs metals, and we have nowhere near enough for all manner of reasons that I could describe, mostly that all boil down to the fact that we haven't built enough new mines in the last 10, 12 years. And we need much higher prices to motivate that to happen. When we get a metals bull market, gold usually goes along for the ride. Interesting that it does, in that gold does not have the same fundamentals whatsoever as the other metals in a metals bull market, but nonetheless, gold gets carried along in a metals bull market. So if we achieve perfection, I think gold does well as part of the mix of a metals bull market. If we stay where we are, which is just more of the same, not sure whether we're going up or down, gold has done pretty well year to date, right? I mean, the last month, 2 months have not been, and last month in particular has not been as fantastic. But in general, gold has held its ground. It's gone on a few, it was pretty strong there from, February through April. We had a really nice move in gold, stronger. So gold is doing just fine. Gold, the metal, I'll talk about the difference between metals and stocks in a moment. Gold, the metal, is doing pretty much fine in this more of the same scenario. And that's because you still have lots of investors who are protecting their downside, recession wary, hedging that risk. Unfortunately, you don't have a lot of investors leaning into gold stocks, but I will get to that in a minute. We are going to stay in this more of the same scenario for a little while. We know that central banks aren't done raising rates yet. I mean, I'm sick of talking about rates. Everyone's sick of talking about rates. But in the last few weeks, the rates conversation has shifted quite noticeably in the direction of, okay, we are going to have to do a few more rate hikes. We are not there yet. And that's why gold has not done well in the last month, because that reality has set in. And of course, the reason that rates have to continue to rise a little bit more is because inflation is dropping. But the question that matters, the only question really that matters, is will it keep falling, and will that fall bring it low enough to create confidence that the inflation monster has been slayed? Well, what is low enough? I mean, it's an interesting question. I think this incrementum chart that I have here on the bottom is kind of an interesting one. It shows inflation from the pandemic raising up into the red hot territory and then coming down. If we want to get to 2%, if that truly is the goal, getting inflation, the average of inflation over a decade to average 2%, then we would have to have inflation average 1.2% until 2030, year over year. 1.2%. We are so far from 1.2% that it's laughable. If we want inflation to get down to an average of 2% over 5 years, then we would have to have inflation average 0.2% until 2026. I put those out there not because I think the Fed is actually going to try and hammer inflation down to 0.2%, but it just sets the stage. It's a reminder of how high inflation is and how far it still does need to come down, because it's an average thing that they look at, and we have a lot of work left to go. So gold, the metal, has done fine. There's lots of reasons to believe that it will do fine going forward. But gold stocks are not doing very well. There are a few standout stocks that have been attracting attention, that have been doing great. And that's great for those. But in general, gold stocks have been on the struggle bus. And one of the things I think Marin's team at Katusa Research, this is an interesting chart that they put together, which shows the price of gold in black. And then in green, it shows cumulative funds flowing into gold miners. And you can see that since 2016, there has been no new net money entering the gold space. That's a long time. So obviously people who are in the space have traded around in and out, and that's fine. But there hasn't been new investors entering the space. And that's a problem. That's what we need. And that is why gold stocks haven't been performing. So what's going to make that change? There is this concept, this big macro concept that, debt having cost, which it now does after this intense rate hike cycle, should over time shift investor interest back to fundamentals instead of speculation. And that should bring investors, it is bringing them back into bonds for yield. And potentially there's this concept that instead of spec, they'll go for value in investing, and gold benefits from that. Another thing that could happen is whether the big tech bubble ever pops in some form or another. That would certainly be a dramatic event that would shift investors towards gold as a hedge. Of course, a recession would shift investors towards gold. And then geopolitical shifts are sort of an underlying thing that continue to matter. I don't like to talk about geopolitics when we talk about gold, because usually when you say geopolitics, it's like some event, maybe even a black swan event, that sparks interest in gold, and then gold sort of comes back down again as that discrete event resolves. But I am mentioning it of late because the gradual but very clearly underway processes of deglobalization and de-dollarization. These are very slow. I'm not saying that the dollar is being kicked to the curb tomorrow. I'm not saying that by any means, but I am saying that, as Christine Lagarde said, there are lots of countries, particularly those with closer geopolitical ties to China and Russia, who are accumulating gold as an alternative reserve asset. And this matters because, as the charts on the bottom there show, central banks are buying gold hand over fist. And I think that helps to explain that is one of the additional reasons why gold is doing well, even though gold stocks are not doing particularly well. Central banks don't buy gold stocks, but they're buying a lot of gold. You can see on the chart on the left there that the year to date purchases of gold are really high. I put the chart on the right in there because I think it's interesting. The blue bars show central bank gold purchases that central banks report. The yellow or golden bars show unreported. So the World Gold Council knows how much gold central banks buy, but they will not out the buyers. So if the central banks aren't disclosing publicly that they are buying X amount of gold, the World Gold Council knows it, but they will not say. And so the yellow bars show all of the gold that's being accumulated by central banks that aren't disclosing it. And I think that underlines that the central bank buying is a geopolitical thing. They're doing it, they're diversifying their asset base, they're giving themselves options, and they're not talking about it because that's what you do. That's the sort of stage. I mean, it's not the most exciting in this moment. We are muddling through. It is more of the same for a while. We're still trying to figure out which path is going to happen. The unicorn, I think, has been cited. There's a possibility that we are going to get to this perfection. But there's other reasons to believe that we're not. I mean, I've seen some really interesting analyses of yields that show that a soft landing is very unlikely yet, because the first thing that would likely happen in a soft landing, or historically, when we have gone from a yield curve inversion and skipped a recession, there were two occurrences when that happened, 1966 and 1995. And in both of those cases, rates had to start coming down before just when that tipping point was happening. So rates started to come down, and that's what made money easier and lifted the economy away from that recession that was threatening to bite. We aren't there yet. We are still raising rates. So there's absolutely still recession risk, but the data still looks pretty strong. We're still muddling along in the we don't know what's going to happen next scenario. Gold is doing fine, not exciting, unfortunately. Gold is doing fine. Investors are generally sitting on their hands. I'm going to get to that in a moment. Stock thoughts, the gold equity market that lacks sufficient investor interest, as I outlined, is getting, until 2 months ago, it was quite clearly divided into haves and have-nots. The haves were the stocks that had attention and momentum, could raise money and make progress. There's a few of them. The have-nots don't get those things, and they can't make progress. That division still exists. Unfortunately, in the last 2 months, a bunch of the haves have slid into the have-nots. The have category has slimmed down a bunch because things are just tougher than they were. When gold does start to go again, I would say pay attention to those that have slid disproportionately over the last 2 months, because I think those are the ones that are likely to lift back up into the we like it category ahead of others. And I have some examples there of stocks in my portfolio that I think fit that description. Another thing that I think is worth paying attention to, I think gold is going to be a bit boring this summer. Therefore, I think important news that comes out, just exploration news, might get a bit overlooked. I know Banyan, for example, put out a great resource 6 weeks ago and has gotten no love for it. And I think that's because we're just in this scenario. I'm actually going to skip that so that I can get to this last slide. This is money market funds. And the fact that we are at an all-time high in money market funds, I think, is a capture of the fact that so many investors are just sitting on the sidelines. And when I chatted in the last few days, I've had a couple catch-up calls with mining CEOs who wanted to, and I asked them, who had just gone on marketing trips, and I asked them, what's it like out there marketing? And they're just like, everybody's sitting on the sides. Nobody's buying anything. And that's what this chart shows. This chart shows that everybody's sitting on the sides, holding on to their money, not buying anything. So they don't know which way things are going. When there's some clarity on that direction, I think a bunch of money will come into the market. It will either play the recession market, which means gold, or it will play the growth market, which means base metals plus gold. But until we get some clarity on that direction, unfortunately, I think we're still sort of stuck in this limbo. It's going to be a bit of a limbo summer, but it's important to pay attention to what the stocks that you like are doing during that limbo summer, because they're still the stocks that have money and that are exploring can still produce some pretty fantastic news during that time that will matter when interest returns to the space. So that's what I have to say. And without further ado, I would love to move over to Martin, who is with Sanu Gold. Sanu Gold is one of those companies that does have that has been active, that has been drilling, and I think is onto some pretty interesting results at their suite of projects. Sanu is still a fairly new company. Martin, could you please take it away and show us what's going on?
Absolutely. Thank you for the introduction, Gwen, and great overview of the market. And I'm definitely hoping for the return to more attention on the gold explorers, because we certainly need to discover. And Sanu, we're exploring for gold in the Sigiri Basin of Guinea in West Africa. Obviously, we're an exploration company, so there are forward-looking statements. You can read the disclaimer at your own leisure. The company has assembled quite a good team for a junior exploration company that just listed last year in July. We have a combined experience of over 50 years of exploration, development, and production in West Africa, and very tight share structure, high management component in the ownership of the company, and also quite a good proportion of institutional and high net worth investment in our company. We have 3 properties in Guinea, specifically in Guinea's Sigiri Basin, and that is located in West Africa. West Africa is now the number 1 gold producing region geographically in the world, and our play is surrounded by some world-class, long-standing gold mines, and there are increasingly new discoveries in the region, and we have a lot of targets mapped out that we worked on over the last 2 years, and we've just started a 25,000 meter testing program. So we're located here in West Africa, in Guinea to be specific. We're surrounded by Senegal, Ivory Coast, Mali, and Ghana. Geographically, this area is about the size of Australia or China. It is now the biggest gold-producing geography in the world. It's a French-speaking republic, similar in size to the UK. There's a transitional government in place since 2020, and mining is a very significant part of the economy. It makes up 18% of the GDP. 75% of its export earnings come from mining. The country is a top 20 gold producer. It's the second largest bauxite exporter producer. It makes about it produces about 24% of the world's bauxite needs. It is also a reasonably significant diamond producer and hosts some of the biggest undeveloped iron ore deposits in the world that are now just being opened up and being developed. What I like about West Africa, and particularly about Guinea, is that the governments there are quite hungry for exploration and investment. So red tape delays like permitting drilling programs are minor, and basically you can get on the ground and drill your targets fairly quickly. You don't have to suffer 6 to 12 months permitting. And likewise, new mines are getting, provided the work is done well and properly, there are no significant delays to putting mines into production. We're located in the Sigiri Basin here. As I said, West Africa as a region is the number 1 gold mining jurisdiction or geography in the world, and it's also the fastest growing producing region. It produces about 500 tons per annum of gold output as a geography, which is way ahead of places like China, Russia, and Australia. And not only is it the biggest producer by tons per annum, it is also one of the best endowed pieces of geology that you can, if you compare it to other jurisdictions around the world, the gold endowment is the graph in white here on the right hand side. Per million square kilometers, you can see it's way ahead of China, Russia, and Australia again, by a factor of 3 or 4 actually. And now zooming in into the Sigiri Basin. The Sigiri Basin has been a gold producing area since historic times actually, and in modern days the modern mines started at Sigiri. AngloGold operates a mine there since 1996 with an annual output of 300,000 ounces per annum, and still quite a large mineral resource, 6.2 million ounces M&I and 3 million ounces inferred. The Lefa mine is operated by Nordgold. That mine has been operating since 95 as well. Current output is about 170,000 ounces per year, and a very large reserve space as well. Recently, in 2021, Tri-K was put into production by Managem at an output rate of 120,000 ounces per year. Also quite a big resource base, 2.3 million ounces, and a reserve of 1.5 million ounces. The Kouroussa mine was put into production earlier this year at a run rate of estimated 100 to 140,000 ounces per annum. And then there's a very significant new discovery that was made by an Australian junior, the Bunken deposit discovered by Predictive Discovery in 2021. It's currently at 4.2 million ounces and growing. I believe that deposit will go up to 5 million ounces and is currently undergoing studies towards feasibility. So the total output of the basin of the district that we're exploring in is over 800,000 ounces per annum. All of it is open pit mines. There's just recently there's some small underground mining being developed at Lefa. But by and large, the basin, while it's highly endowed, is quite underexplored and immature in terms of modern day exploration, especially by junior companies. This is the board here. I'm the CEO and the president, and one of the co-founders. I'm a geologist by background. I started off in Australia in the 90s, gold mining, and then have been working in West Africa since 2007, basically. I was involved with some deposits in West Africa and Senegal with the Sabodala mine that we drilled out and put into production with an Australian junior, and then sold to Teranga Gold on the TSX. And recently that asset was acquired by Endeavour. Very long running mine since 2009. It has been producing, and it's actually producing more gold than ever and has a longer mine life than ever. This is just to illustrate how these assets grow over time once you start exploring this district in more detail. Our chairman, Vince Sarachi, mining financier. Fiona Child, Dr. Fiona Child joined us as soon as we listed, our VP of Corporate Development and Communications. And then we have Dr. Sreen Jeng, our exploration manager, educated in Canada and extensive West African gold exploration experience. And we have a strong Guinean team on the ground led by Sekou Traore, our country manager, and a CFO based in Vancouver with plus 25 years corporate experience. And Fatou Gueye is also one of our co-founders, Australian Senegalese, with a big focus on mining finance in West Africa. We have also quite a bit of Guinean experience with Brett Richards and Peter Flindell, who were involved in drilling and developing some gold assets there in the past. The tight share structure, a total of fully diluted 81 million shares outstanding. Last reported cash position was 2.3 million. Share price has weakened over recent month with the current market. And insiders and founders currently hold 40%, institutions 25%, high net worth individuals 25%, and there's about 10% in retail hands. So quite tightly held. Last financing was done in February. We raised 3 million there for our drilling program. ESG commitment. We're a junior exploration company, but we work very closely with our local communities in and on and around our permits. We make it a point to recruit as local as possible, to do our procurement as much as possible locally as well, and of course communicate with local authorities and the community leaders in advance of our work programs. And as we develop the projects, we'll develop that ESG component further as well. This is an overview of the Siguiri Basin. You can see it's very tightly held. The great polygons is a myriad of permits by small companies and individuals. The big brown, the big yellow areas here are around our permits, Dina, Digifara, and Bantabai. You can see we're in a blue chip neighborhood. So we have Anglo Gold as our neighbor here next to Dyna and Digifara. This is the Anglo Gold operation. This is the main center of their production, but then they're also feeding satellite pits from the west and from the east. And to the north of Bantabai, our flagship project, we have Lefa, operated by Nordgold. They're aggressively exploring that piece of ground as well, and on an annual basis, actually, are replacing their reserves depletion. And the predictive discovery deposit is down here, as is the Kinero and Korusa mine. Just zooming in very quickly on our flagship property, we've mapped out some very extensive gold anomalies there, followed them up with auger drilling and mapping, and then very recently completed our maiden RC drill testing program there. We managed to complete some holes into targets 2, 3, and 7, and we were rewarded with a 11.4 grams over 15 meter result at target 2. In what is actually quite a nice structure that's holding together on sections and is still quite wide open. The target is more than 500 meters in strike length, and it connects with other targets on this Bantabai thrust here. That thrust is well over 6 kilometers long on our permit, and it's also the host of target 3, which has delivered very similar intercepts, lower grades, but similar geology and width. As has target 7. So there's a lot of untested strike potential, but we can see that the geology and the mineralization of the structures is holding up even on a first round of very light drill testing. So exciting days ahead to follow that up. Down dip and the long strike is quite wide open. In total, we want to complete a program of 10,000 meters of target testing there. And this is Dyna 2, where we had an early success last year, immediately after listing. We came out with some very exciting results there as well. 4.7 over 21 meters, 5.4 over 15, 5.5 over 11. This came all from target 2 here. The central portion of this target was tested last year and developed and delivered these very interesting results, driven by some very high grades in a broader lower grade interval. This target alone is 4.5 kilometers long. We've tested about 300 meters of strike in the center of it, so it's wide open. Down dip as well as long strike, and target 1 here has only seen some very light scalp drilling, which intercepted gold, but we need to come back here with some more extensive systematic drilling here. So we need at least 10,000 meters to follow these 3 targets up with some degree of systematic drill testing. And just to sum it up, we have quite a nice, well-developed land package. There's a lot of work that went into defining these targets very systematically, and they're ready for systematic drill testing. We've commenced our 25,000 meter program that we're planning to complete. That's well over 200 holes. We're looking for shallow, open pitable resources. So 25,000 meters go into many, many holes there. So many chances to deliver some good hits from that. Both maiden programs, at Dyna and at Digifara, both of these initial programs delivered discoveries with some very high grades, actually. And we have the team to deliver it, extensive West African experience on the ground, and a good team in Canada to provide the leadership on the corporate side, and still a very tight share structure. So this is that was the summary. If there are any questions.
Of course. Thank you, Martin. Thanks for the run through. Always hard to go through an entire story in 15 minutes, especially when it's a story that I think is probably still new to a bunch of people. There are some questions that have come in. I did forget to mention, terrible of me. Please, for those who didn't know, there is a Q&A area. Please send in your questions. There are some that have come in, and I can always ask questions myself, of course. So let's start with, I want to ask you a bit about Predictive's Banken discovery, mostly because it was only discovered like 2 years ago, and it's already at over 4 million ounces. So that is a very rapid pace of delineation. So can you just explain how and why that's really standout. So can you just talk about that for a minute, like what the geology is, what the approach is, and what that means for you guys?
Sure. So just as a background, I think that the key factors are two. A is the geology, and B, it's also the significant ease of permitting major drilling programs in a country like Guinea. So that is fairly quickly done. But Predictive basically followed a very similar methodology to what we're deploying. So surface geochemistry, delineating gold anomalies, and then following them up with auger drilling. The auger drilling is a very cost-effective, fast tool that will just test the bedrock underneath a blanket of laterite that covers most of the West African craton is covered by this 2 to 10 meter thick overburden, let's call it. And that is a laterite, hard surface, a Dury crust. And to see through that properly, shallow auger drilling is very cost effective. So you then follow up your surface anomalies with that, and you get a better focus of where your structures are that you need to drill test with RC and diamond. And that's how Predictive made their discovery. We made our discoveries in the same way. Predictive they managed to early on with their first few thousand meters of drilling, they focused in on a very wide shoot on a mineralized structure that delivers very wide intercepts in a felsic unit. And we've intersected a mineralized felsic unit now at Bantabay as well. So we like that analogy. And that way they managed to drill out quite a lot of ounces fairly quickly. The other big factor is everything is near surface, and there is deep oxidation down to 70, 80 meters, as is on our ground as well. That's a common feature on the West African cratons. Deep oxidation down to 70, 80 meters. So you can use RC drilling. It's much faster and much more cost effective than diamond drilling. Doesn't quite give you the same level of geological detail, but it gives you the essential thing, which is assays. And it delivers that very quickly and cost effectively. So typically to drill out a resource in West Africa, it's done 80% RC, 20% diamond. Mm-hmm. And those three factors, I think, led to them drilling such a large deposit so quickly. Absolutely. Geology, drilling methodology, and the favorable environment to operate in.
Absolutely. And I know when you and I caught up just last week, the week before, whenever that was, you certainly, yes. One of the things that has you most encouraged about the early results at Bantabay are that it is this felsic unit, and that that's heartening. I mean, the other kinds of mineralization in the Siguiri Basin are also quite rich, as you know, but the possibility of having these the similar sort of wide zones of good mineralization, that would be lovely if that's what that turns into.
Yes, and I think we still have a lot of strike length to test on our structure there. We've seen the mineralized felsic now on 3 targets over 2 to 2.5 kilometers strike length in total. But the entire trend that we have on our permit is at least 6 kilometers in strike length. And we don't have outcrop everywhere. We have very small windows of outcrop. That's where we started our drilling. And there's a lot that is probably hiding the connections between targets. So we'll look forward to following that up. Plenty of space there. And also that our drill testing to date is only down to 60, 70 meters vertically at Bankan. Yeah. Which is quite shallow. The Bankan deposit has been drilled down to several hundred meters to make up these 4 million plus resources.
Absolutely. So yeah, I mean, just the strike length and there's lots of room there to find some good stuff, and you're finding the right the way it's starting out is very, very promising. Okay. You have what I would say a new gold discovery in an area where there's been a phenomenal gold discovery in the last 2 years, and you have a tight share structure with a huge insider ownership. These are all things that I outlined because, like any explorer, you're going to have to raise money at some point. When you go out marketing, can you just talk about, like, do you market just ahead of financings? Do you market all the time? Do you have a strategic approach to how you want to raise money now? Like, would you want to bring a major miner in if they were interested? Are you always building your book of funds that might be wanting to participate if there's a financing? Can you just talk about your approach to raising money, given that the market is somewhat challenging, but you do have your advantages at Sanu that I feel like probably attract some traction?
We have a lot of interest from all sorts of different sources of funding, that's for sure. Having said that, our favorite way to raise funding is on a good, strong share price and raising money from lots of different people.
Mm-hmm.
So that's why we do a lot of marketing. We've been doing a lot of marketing ever since Dr. Child joined us after listing. So we continue to do that when the opportunities are there, when we have time, when we're not in the field there. But we've also had approaches from mining companies, obviously, who look to establish themselves in Guinea. That's they're very interested in a portfolio like ours. It's probably 2-3 years of work to get to this stage. So this is attractive. Even to strategic players to have an asset like that, and then everything's ready for drill testing. So
that's interesting too, that it's not just companies that are already set up in Guinea, but some that are perhaps interested in stepping into the country.
Exactly. There's a big focus now to get into the in quotation marks new frontier. It's not brand new because mining has been happening there for 20 years, but certainly exploration on the rest of the Sigiri Basin has been big time neglected over the last 20 years, and it's really only picked up in the last 3-4 years and accelerated with that discovery by predictive discovery. So people are looking to come in on the back of that. That's spotlighted the opportunities there. It's also shown that it's a workable jurisdiction for listed companies, even big and small. Mm-hmm. And also, to some extent, the surrounding countries are getting quite mature. And in some of them, there are security risks that we don't have and we don't see arriving in Guinea.
Yeah, I agree for sure. I mean, the workability factor is really important. I'm not just saying relative to Africa. Any country that you want to explore in the world these days, workability is maybe the first thing that major mining companies pay attention to. So
absolutely, yeah, geology plus workability. Yeah.
Perfect. Well, thank you. We need to move along, but thank you for that. If anybody still has questions, we will make sure that they get answered. I'm sure we can make sure that they get answered either at the end of this conversation, or put you in touch with Martin if needed to answer some questions, because I'm sure he's keen to talk to anybody who wants to learn more about the story. So thank you, Martin.
Thank you, Gwen. Thanks a lot.
Yeah, take care. We're going to move on to Azimut. Jean-Marc, I would love to ask you to step forward in an electronic manner and give us the latest with Azimut, which has several irons in the fire. So let's hear about them.
Thank you, Gwen. I'm pleased to be here to provide you an update on our activities. As you may know, Azimut is one of the leading explorers in Quebec, which is recognized as being one of the leading jurisdictions around the world. Okay, next. Azimut has 3 main components. First, we have the largest mineral exploration portfolio in Quebec, dedicated to gold, copper, nickel, and lithium. Among these properties, we made a discovery in 2020. It's called the Elmer discovery, which is our flagship project, 100% owned by the company. This is a highly promising project. We are close to deliver a 43-101 report with a maiden resource. All our business has been driven over the past 20 years on data processing, one of the key strengths of Azimut is our ability to process large amount of data to be able to recognize key targets, key underexplored targets at the scale of Quebec. This led us to develop many joint ventures, many strategic agreements, in total 35 agreements over the past 20 years, including 14 agreements with major companies. Our positioning were mostly involved in the James Bay region, in the central part of Quebec, of course, with the Elmer project, a newly generated lithium project that we call the James Bay Lithium Project. One major positioning in nickel with 111 block of claims. Again, position at the scale of the James Bay region, which is probably one of the hottest exploration places in Canada. It's really James Bay is experiencing at current time a booming period never seen before. We have also large positioning in the northernmost part of Quebec that we call Nunavik with the Rex and Rex South project. Azimut is recognized as having an excellent share structure. The company has been formed 37 years ago, and we have a small number of outstanding shares, less than 80 million shares. Good working capital, working cap with about $6 million in the bank. The ownership is strong, is tight, about 25% for the Quebec-based institutions, 10% for Agnico Eagle, and the retail part is accounting for about 25%. It's tightly held, and we have been able to demonstrate our ability to manage the share dilution rates through time. Now coming back on the Elmer gold discovery, I'll provide you some insight about it. Elmer is well located in the James Bay region. It's an highly accessible region with paved highways, power lines everywhere. Sometimes there are too many power lines. It's incredible how it is easy to access to the ground on a year-round basis. Another important point, the relationship with the First Nations, namely the Cree First Nation, is very good. They are supportive about mining activities. They are pro-mining, definitively pro-mining. And again, it's a big strength for Quebec for having developed long-term, positive, constructive relationship with the First Nations. The Elmer project itself is a typical sheared greenstone belt. The property has a strike length of 35 kilometers. We're considering it as still largely underexplored. What is marking the property is a number of high-grade showings which have been poorly explored by the past. We staked the property in 2018 and we started to review the database, and this led us directly to an already found showing named Patron with the highest gold value on outcrop of 10.4 grams per ton. This led us to start a very classical prospecting program. Very quickly, we had been able to uncover high-grade grab samples, and this led us to decide to start a new a maiden drill program in late 2019. And this led directly with the discovery of a wide, robust, consistent gold system. On this slide, you can see the best grades, like 24 gram per ton over 18 meters, 3.15 over 102 meters. Anyway, a list of the key intercept tell you that we're dealing with a very consistent and robust system. And of course, now we are advancing with a maiden resource, which will be available in few weeks from now. In 2023, we're close to the objectives which were projected last year. Again, we are, completing at current time a 43-101 report to deliver a maiden resource. The objective for the company, for Azimut, is to, of course, to crystallize a resource, and starting from that point, envision the next step for the property. In the meantime, we have developed extensive drilling program to find comparable targets, along strike or parallel to the initial discovery, the Patung Gold Zone. This is, the shape of the ore body. You see the mineral intercept, which are closely related to a felsic intrusion. The surrounding targets, we have defined 12, hot drilling targets immediately around to the discovery. Just to summarize, the discovery geometric continuity is very good. We foresee an obvious open pit potential. There is a wide continuous mineralized envelope. There is no structural complexity. Metallurgical tests are really encouraging with excellent gold recoveries up to 94%, including a large part through a gravity circuit. The infrastructure is good, and the jurisdiction is excellent as well. Very quickly, we have developed a large lithium portfolio. As you know, the James Bay region is really experiencing exciting times. We have one of the largest lithium portfolio at current time, shared with Soquem in part, but also several properties that we want to advance on our own. Azimut is very well located immediately west from the Patriot discovery, the famous CV5 discovery, which is certainly one of the biggest lithium discovery made in Canada ever. We are starting a large program to uncover the lithium potential on the property. We believe that we have the right ingredients on the property to uncover the continuity of the Patriot discovery. This is notably based on lake bottom sediment geochem that we are extensively using to predict notably the lithium potential at the scale of the James Bay region. We have also two well-located properties immediately south, Corvette and Kanaya, which are showing obvious targets for lithium. We are also on strike with a discovery which has been announced by Winsome Resources on their Adina property. We are just sharing the same structure, probably the same pegmatitic set of dikes. One example of the potential on the Galiné property, what has been recently announced by Winsome, their Adina property is just dipping toward our property, our Galiné property, and we start exploring this property for lithium by directly drilling a potential down deep extent of what is known on the Winsome discovery. We have also a unique nickel portfolio, probably one of the largest nickel portfolio in Eastern Canada, with more than 100 blocks of claims. Essentially, we're looking for Eagle's Nest mineral deposit type, small but very rich nickel copper massive sulfides. Last slide. In summary, we are concurrently advancing several iron is a fire. First, the Elmer Gold project with a Maven resource, which will be soon delivered. In the meantime, we are advancing properties with our partners. We have 9 properties in agreement, covered by an agreement with Soquem, one with KGHM, and one another with an Australian-based company named Montreal. We have a strong project pipeline. The idea for us is to advance by ourselves on key properties, but also continue to develop our partnerships to optimize the discovery chances and share the risk, the financial risk with partners. Yeah, this is covering our story in a little bit more than 15 minutes.
Thank you. No, I think you did well getting it all into a little bit more than 15 minutes. Thank you, Jean-Marc. Let's talk about them in the order that you talked about them. So let's start with Elmer. Can you talk a little bit in a little bit more detail about what your exploration plans are for the other targets at Elmer now that Patuan is getting, we'll talk about the resource estimate in a moment, but the other targets. So what precisely are you doing?
We have outlined about 12 surrounding targets immediately on strike with the Patuan Gold Zone, but also along parallel structures. Just by knowing much more about the geological context, about the footprint of Patuan itself, we know that there is a very strong exploration upside on the property. If we put this into perspective, there is no way to understand Patuan as a single alone ore body having such robustness, such grade, such width, without having brothers and sisters. No way. This doesn't exist. We keep a full confidence about our ability to discover peripheral zones, and we don't know yet if we have already found the center of gravity at the scale of the property. It's wide open. And of course, this is supported by early results that we will report very, very soon.
Okay. Hold your breath. Okay, on the reporting very soon side of things, obviously the resource estimate is coming out very soon. Was it a little bit delayed? I think if I'd asked you last December, you thought it was going to be earlier than this. Yes,
that's right. Perfectly true. When you have to revise the database, you have ways have to make checks, verifications, and this is taking time. We had to integrate the last results, which have been drilled up to March 2023 on the property. We had to do a surveying of each ore collar to be able to convert a part of the inferred resource into indicated resource. This took more time than anticipated, but now it's a matter of weeks. And we believe that this will be a robust milestone for the future on the project.
Okay. Okay, and
it's a matter of weeks.
A matter of weeks.
Yeah.
Okay. All right. The Maven resource from a discovery in 2020. Wide, pretty some fantastic widths and grades on Elmer. That's what attracted me to the company in the first place. What was the last thing I was going to tell you or ask you about? Do you, on the lithium side of things, moving along, certainly that has injected some new investors into the story, new, more work for you. This isn't a new thing for you, though. This is, I mean, a lot of other parties have come to the Quebec lithium scene in the last little while. Azimut was aware of this before. So you have your joint ventures with Selquim, and you have, I mean, some of your projects that are 100% owned. Covet, is that what it's called? And Kanaya? I don't think I'm saying that right. It has a lot of A's in it and quite a few N's. What are your plans for the ones that you're advancing on your own? Because some of those have some pretty exciting lake sediment numbers on them.
Yes, in fact, we want to advance our lithium project according to three ways. As you mentioned, through our joint ventures with Selquim. And this is a done deal. No mystery about that. We have also the intent to make new deals with good partners, with credible partners for lithium. But we want to keep some of the assets on our own, to advance them on our own, for we believe very, very good reasons. The way we will advance those properties will be through basic prospecting. Again, we are experiencing an incredible dynamics now in the James Bay region. The potential has a great lithium potential, which is compared by many senior companies as a context recognized in Western Australia, where the largest hard rock lithium mines are existing. We are starting to uncover a comparable potential in the James Bay region. We have been working in the region over the past 20 years, and based on the way we are processing the large existing database, I think that Azimut is very well positioned. And of course, we will advance on our own the largest claim blocks. It's very clear. It's a given. It's a gift, and we want to take advantage of it. Techniques, very basic. The key starting point is to be at the right location, and we believe that we are at the right location. And now we will start doing basic prospecting work, supported by remote sensing analysis and supported by the lake bottom sediment database.
There you go. So I think it's repeating what you said, but as someone who's very familiar with the James Bay region, you expect to see more lithium discoveries in the James Bay region in the coming years. Is that an accurate statement?
No doubt. It's absolutely true. It's fascinating how we have been able to neglect so obvious potential because nobody paid attention by the past on lithium. In fact, spodumene-bearing pegmatites were only used to be helicopter pads because they were outcropping.
Yeah, they're hard. They stick up, and you land your helicopter on them.
It's a revolution, And now we are just looking for the most obvious targets, which are outcropping pegmatites. And from what we know, there are many prospective sectors, and of course they are fully identified on our ground, and we will be able to move very fast and advance very, very fast. This is, from a technical standpoint, it's not really a challenge. Now, as you know, Mother Nature will dictate where, we don't know where the center of gravity at the regional scale will be. if there is only one or two or three or five. It's really an emerging boom with a fascinating potential, not only on our ground, but there are very, very serious companies involved now in the James Bay region, and the story will change. And eventually, by looking for lithium, we may discover something else. It's a classical scenario in mineral exploration, but of course, if we look for lithium, we hope finding lithium.
Fantastic. Cool. Well, good luck keeping all the balls in the air. That's lots. I'm sure many of us on the call are keenly looking forward to the resource estimate, as well as to some results from these lithium projects. So thanks for joining us here today, and keep us up to speed.
Thank you, Gwen. Thank you. Much appreciated.
And with that, I'm going to wrap up my first hour of this webinar, and I will hand the reins over to my colleague, Peter, who is going to take us through his latest thoughts on what's going on out there and the companies that have joined him. So, Peter, please take it away.
Well, thanks, Gwen. So after some interesting presentations from a couple of companies that Gwen brought to you, I will dig into the silver opportunity. And so my name is Peter Krauth. I'm the editor of the Silver Stock Investor Newsletter and author of The Great Silver Bull, a book all about investing in the silver opportunity. I'm going to cover the silver market and highlight the opportunities that I see ahead. And then that'll be followed by the presentations of two outstanding junior silver companies. So if you have any questions as we go through these presentations, there is a chat window where you can certainly go ahead and submit, a Q&A, where you can submit questions. And when we get to the Q&A session with each of those companies, we will try to address those questions. So let me get started with my presentation. Silver, I will try to explain to you why I see silver as what I call an asymmetric opportunity. Here's an interesting quote from a gentleman by the name Jörg Kiener, who is founder and CEO of Swiss Asia Capital. He really recently told CNBC that silver is trading at historically such a beaten down level. Expect to see a massive move in silver. So I'd like to look with you at the supply demand picture in silver and some of the particularities or peculiarities of this market. So to give you a quick overview, note first of all that to get an idea of the size of the market, demand last year hit a record of 1.24 billion ounces of silver. And that was actually up 18% over the prior year. That's tremendous growth in any market. But now when you look at supply, it's interesting to note that supply was flat. No growth versus demand up at 18%, supply flat at 1 billion ounces. And so, as you can see, there's a shortfall there of 0.24 or 240 million ounces. The growth in demand last year was led by industrial, which includes things like solar, which we will talk about in more detail shortly. But solar panels alone, demand for silver from solar panels was up 28% to 140 million ounces. Jewelry demand was up 29%. Silverware was up 80%. And investment, which is what I certainly consider the wild card in the silver market. Investment demand was at a new all-time record at 330 million ounces, or 22% up from 2021. So we talk about silver usage, and in particular in solar panels. So this chart on the left shows you two things. The blue bars are the amount of silver that goes into solar panels every year. So in 2021, that was about 110 million ounces. In 2022, that jumped actually quite significantly by 30 million ounces to 140 million ounces. Now, the second thing to look at is this orange dotted line that trends downwards. Now, that is the amount of silver, we call this silver loadings, the amount of silver that goes into each solar panel. And over the last 10 years or so, that amount has been falling. Obviously, solar panel manufacturers try to do what we call thrifting, where they try to cut out as much as they can of individual inputs so that they can lower their costs, which obviously makes sense, makes them more efficient and improves profit margins. But there is a limit to how much they can squeeze out of silver. And I believe that we're at an inflection point in terms of the amount of silver that's going to go into solar panels. Now, the chart on the right shows the three main solar panel technologies. At the bottom, as you can see, the first is PERC, then we have TOPCon, and then finally HJT. So what's interesting to note is, well, PERC dominates right now at 80 milligrams per solar cell. TOPCon actually requires up to 50% more silver per panel, and HJT requires up to 150% more silver per panel. In both of these cases, these percentages are above and beyond what PERC requires. So here's an interesting tidbit, which comes from Rystad Energy, which is an energy consultancy out of Norway. And their estimate for 2023 is that 80% of all new solar panel cell manufacturing will use these two new technologies, both TOPCon and HJT. So again, remember, these require anywhere from 50 to 150% more silver per panel than the established PERC technology. So again, this is what we're talking about here is new manufacturing capacity, but I believe that that is quickly going to take over and to lead to the dominant technologies in the market, as well as the amount going to lead to a lot more demand for silver in the solar space. And here is another chart that helps to give you an idea of exactly how bullish this market is, the kind of momentum that it carries. So this is from the International Energy Agency, as well as Incrementum. And what it tells us is that the forecast from the IEA is that between 2021 and 2030, there will be about 7 times as much solar powers generated by solar panels as there was in 2030 as there was in 2021. So that's a 7-fold increase. And that requires a 25% annual growth rate to achieve those numbers. And this is all to make our way to the net zero targets that we have by 2050. So that's going to require a lot more silver. And yet, if we look at the supply side of things, it's a very different picture. These dark blue bars are mine supply. The lighter blue portions are recycling. So the total of these makes up the amount of silver supplied to the market. Mine supply peaked in 2016. It's been falling ever since. 2021 was actually down 1% over, 2022 was actually down 1% over 2021. 2022 had the lowest levels of the past decade. The only exception was 2020, which was due to COVID shutdowns. So keep in mind, once again, silver demand has been soaring, up 18% last year, and yet supply overall last year was flat. Mine supply was actually down 1%. And new supply certainly doesn't look very bullish either from mining. So that's been falling overall on balance for the last 10 years. We also know that it takes about 15 years to go from discovery of an economic deposit to the first pour of that metal from the mine. And ore grades are falling. So the Silver Institute does tell us that over the next year or couple of years, they do expect silver mine supply to increase, but we're still only talking about a couple of percent. That will, even if that does play out, which I have my doubts about, I certainly don't think that that's going to make up for any of the dramatic increases in demand that we've been seeing. This chart talks about the amount of spending by members of the SIL ETF. So these are mostly silver miners, silver developers. And as you can see, since about 2013 overall, there's been a dramatic drop in the amount of spending on capital expenditures to be able to either build new mines, expand new mines, etc. So that in itself certainly, again, does not bode well for the overall output of silver over the coming years. This chart shows us the two largest silver producing nations being Mexico and Peru. Number 3 in contention with Peru would be China. The numbers out of China are not as reliable. So in any case, we have Mexico in green, Peru in brown. And as you can see, since about 2014, 2015 or so, output from those countries has been falling off. There does seem to be a couple of companies that have been bringing new projects online that may trend slightly upward over the next couple of years. But again, I don't believe that's going to outpace in any way or even keep up with the kind of demand that we're looking at. And here's a sort of a recent anecdote in terms of what's been going on in the market. So Newmont, which is the world's largest gold miner, obviously produces other metals, copper, lead, zinc, and silver. And its Penasquito mine in Mexico is now facing a worker strike. This goes back a couple of weeks. This mine is the world's second largest silver producer. Last year, that mine generated almost 30 million ounces of silver. That's 3.6% of last year's mine supply. And as I say, Newmont is facing a strike with that mine. They've actually just declared force majeure on some of the metals that come out of that mine. So again, a challenging supply side of the market. If we look at the deficit versus surplus balance in the market over the last 10 years, well, we just had a huge swing. 2020 was the last year of surplus. That was about 56 million ounces of surplus. 2021 was a complete reversal to about 50 million ounces of deficit. And then last year, we had a dramatic deficit of 237 million ounces. And if you compare last year's deficit with 2020's surplus, that was more than 300 million ounce swing in just 2 years. And the Silver Institute believes that this year we're going to face another deficit of 140 million ounces. I actually think that that's going to be considerably higher by even tens of millions of ounces, in large part because I think that the demand from solar is actually going to be considerably higher than these forecasts are expecting. This chart is from Bank of America Global Research, and what they did was they looked at a number of base metals as well as platinum and silver and projected what kind of market balance we'd be looking at over the next 10 years between 2020 and 2030. And according to their research, they see silver as amongst these metals having the most dramatic lack of supply or shortage of all of these different metals. So again, very, very bullish setup, demand and supply wise for silver. This chart is from Capital Light Research, and interestingly enough, it goes back to 1996 when we had about the same levels as today. Let me back up for a second. Back in 2002, about 42% of all the silver came from the 10 largest silver mines. This year, about 32% of all of the silver will come from the 10 largest silver mines. So that suggests that there is a ripe environment for consolidation because less and less silver comes from more and more mines. And so obviously there would be some economies of scale to be benefited from. And finally, this is what I'm talking about, the M&A opportunity, and there's a huge gap. So this chart, what it shows us is back at the end of the last cycle, 2009 to 2012 or so, cash flows, aggregate cash flows to gold and silver miners had soared. This is the white line. And what we saw was within perhaps a year or so, when that took off, a year and a half, the green bars are the aggregate net acquisitions. So the M&A activity picked up dramatically after cash flows soared. So fast forward to today, the last few years, In about 2019 or so, cash flows started to pick up with precious metals prices, and they've held up very well, by the way. And yet the green bars are nowhere to be seen practically. There's been very little M&A activity, and this is what I'm talking about, how the huge gap needs to be closed. And I think that we're going to start to see a lot of these larger and even mid-tier players start to use both their cash flow, use their shares as a currency to go out and acquire smaller players and start consolidating the sector. And this just gives you, my final chart gives you a perspective of the silver mining industry. So as you can see all the way over here, it barely makes its way above the black line. Silver mining industry versus the gold mining industry versus the S&P 500 energy sector, the entire diversified metals and mining industry, and finally Apple. So silver's tiny. Point being that it takes very little to move this market, and that means some tremendous opportunity lies ahead, especially with the imbalance in the market as we just saw. I go through all of this with a lot more detail and explain to you the opportunity in silver in my book, The Great Silver Bull. And if you want to follow my work, you can do so at silverstockinvestor.com. I'm on Twitter at Peter_Krauth, as well as on LinkedIn. So that is it for me. Our first presenter is going to be Alex Langer, and actually we also have Greg Liller, both from Sierra Madre Gold and Silver. Alex is president, Greg Liller is chief operating officer. Sierra Madre has actually gone through a big transformation recently, acquiring a mine in Mexico, working very hard to bring that online. There's some interesting history there as well with some of the management. And so I will let Alex and Greg tell you all about what's been going on at Sierra Madre. So Alex and Greg, the floor is yours.
Perfect. Thank you so much, Peter. Good morning, everybody. My name is Alex Langer. I am CEO of Sierra Madre Gold and Silver. Sierra Madre Gold and Silver is a development company focused on the restart of the La Guitarra silver and gold mine, which is located about 120 kilometers away from Mexico City. The La Guitarra mine is a fully permitted 500 ton per day facility, which was put on care and maintenance by First Majestic in August of 2018. As Peter mentioned, it took a while to close that transaction, but we've been busy working at site since January of this year, and we closed the transaction about a month ago, and we're pretty excited. These are forward-looking statements. I, myself, and Greg will be making many forward-looking statements, so please have a review of these when you get a chance. They'll also be on our website. Outside of La Guitarra, which is absolutely our flagship project, we do have two other quite exciting exploration assets. The first one being Tepic. Tepic itself, both projects are actually located in Western Mexico in the state of Nayarit. Tepic has had about $20 million spent on the project. It used to be housed in another junior, which actually had a market cap of about $150 million. We've done close to 40 plus holes at that project. We've announced a few of them, and we will be continuing to announce more holes over the next coming weeks. The plan here at Tepic is to come out with an NI 43-101 resource report in the next several months. From there, if it is positive, we'll work towards engineering as well as scoping studies to push that project forward. Besides Tepic, we also have another project called La Tigra. La Tigra is a very small scale past producer. We joint ventured that project from a company called Grupo Mexico. Grupo is a multinational, multi-billion-dollar conglomerate. We're only the second ever junior to do a deal with Grupo. At La Tigra, we've announced 3 holes to date, and we have another handful that we will be announcing in the coming weeks. But absolutely, La Guitarra and the 39,000 hectare project is our number one priority. Quickly on the management team, as Peter alluded to, we do have a bit of history with the La Guitarra mine. Everything we're doing technically is based around Greg Liller and his team. Greg is an exploration geologist. However, he's ran and operated numerous mines, including he's been active in Mexico since 1993. He's actually had 7 projects that have come online that have turned into mines, thanks to, I guess, his work, which is truly incredible. He's had a couple of successful M&As, one one being Gamma Lake, which became Gamma Gold, which sold for $750 million US. And of course, Genco, which really modernized La Guitarra, as well as did the majority of the exploration work. And that was eventually merged with Silvermex before the acquisition by First Majestic. Also on the technical team, I'll quickly touch on one another gentleman, Luis Saenz. Luis has worked with Greg and the rest of the team in the past. Luis was actually the last man standing at La Guitarra through the merger with Silvermex before the acquisition by First Majestic. Luis was most recently with Frisco, another multinational, multi-billion-dollar Mexican conglomerate, where he was in charge of 14 different mining operations. So very comfortable with Mexico as well as operations. I come from a capital markets background. I left Canaccord in 2008, and I've worked on this side of the business, structuring companies, finding management teams, raising capital, kind of pushing them along. A couple of the companies I worked with recently, one was Prime Mining, same with Greg, Luis, and Alejandro. We had the Los Reyes project in Mexico as well. Another company I was vice president of was Millennial Lithium. We had a lithium brine project in Argentina, which we sold early last year to Lithium Americas for $490 million. And I'm also the founder and president of a company called Lift Power with some interesting lithium spodumene projects in the Northwest Territories. Two other people I'll quickly touch on. One is Jorge Ramiro. The other is Alejandro Garabello. They're both Mexican nationals and both on the board of directors. Alejandro comes from a really well-known Mexican mining family. He handles everything for our company in-house. We're not really relying on consultants, accounting, legal. Everything is done through Alejandro and his team. He's worked with numerous companies, including Pan American and Corp Mining, just to name a few. And with that, I'll pass you over to Greg Liller. Greg, as I mentioned, has some amazing history with La Guitarra, and he'll talk about the restart plans, and we'll catch up there at the end. If there's any questions, again, please feel free to put those in the questions and answers.
The Guitarra project is an opportunity. I don't think there's another one like it in the junior space. When we started Sierra Madre, Alex and I clearly stated that the company's objective was to become the next mid-tier producer. And this is our vehicle for doing so. Next slide. Guitarra was put on care and maintenance by First Majestic in 2018. It has 3 fully developed, and they were in production, underground mines, the Guitarra, the Colosso, the Nazareno. The milling facility has been on care and maintenance. It has a 500-ton-a-day capacity. It is, again, fully functional. It will need some replating and some plumbing upgrades, but it's just about ready to go. And we have the permits in place to commence mining very shortly. We've got a little video on the operation. Next slide. Yeah. When we had a group of investors and analysts down, I had them start up everything in the plant all at once, the crushers, the ball mills, and I think I kind of surprised everybody. We put 3 tons of rock through the crushers, which was the first time they had been used in almost 5 years. I know Alex asked me, did you test this first? And I said, no, don't worry about it. It'll work. And it did. It worked like a dream. So, yeah, the whole plant has been well maintained and is in good shape. It's ready to go. Next slide, please. So when I was with Genco, I had recognized that there was a bulk tonnage opportunity here at La Guitarra. And in fact, Genco completed a 43-101 feasibility study. It had a historic reserves in open pits of about 6.8 million tons, creating a little bit better than 4 ounces of silver equivalent per ton. Somehow through the years after I left, the bulk mining, bulk tonnage concept had kind of disappeared. So I fortunately had kept my entire database, as had Luis Saenz. So we've been examining the potential of mining these things from underground. It's much more socially acceptable to do so. And actually the pits were quite high strip ratio. So it might actually be cheaper to do it from and underground. You can see there were the three main pits were the San Francisco, the Crestone, and the Los Angeles. Los Angeles and Crestone, especially the La Cruz portion of it, hold together quite nicely. So we've been examining those, and can we mine those from a bulk tonnage long hole type scenario using the existing development? And thus far, it looks like we can. So we've got a fast track strategy to get this thing restarted. That's changed somewhat in recent months. The first thing we need to do is get a new 43101 resource report out. And then from that, we'll be able to get a mine design. And then probably from there, using all the materials that we have, got the full operational records from First Majestic, so we should be able to establish costs very easily from those, and we'll go on to a reserve report after that. The timeline's about 6 months from now for the resource study, another couple months for the mining study, and then we'll be undertaking the engineering end of it for the mill and the mine during that whole time period. Next slide, please. Like I said, our whole approach has changed in the last couple of months since we've taken possession of the property. It came to light that a lot of the stuff in what I call the boneyard, old equipment, scoops, jumbos and whatnot, are rebuildable and have a lot of life left into them. So that was our main concern with getting this thing up and running. Lead times on mining equipment are out 1.5 to 2 years for new. We can get these things rebuilt in the next year. In fact, we've started rebuilding 3 of the scoops. The jumbos, we've recovered the drilling arms back from First Majestic, so we'll be putting those back together. I don't know how many jack legs we have in the warehouse. We will be buying what they call a stope mate or similar piece of mining equipment to enable long hole mining to be conducted. And long hole is very cheap, especially when you have the widths that we appear to have, anything up from 4 to 20 or more meters wide. So you can get a lot of tons cheap out of that. And then we're going to augment that with mill feed from the high grade stopes that were in production when the mine was put on care and maintenance. All the stationary equipment, the compressors, the electrical substations, all that's still in place. We have all the electric cable over in the warehouse. They took it out of the mines for safekeeping. And same goes with the air compressor lines. So basically what we're focused on now is getting this thing into production within the next year to 18 months. We've got quite a compressed timeline there. Next slide, please. The other opportunity we have here is the tailings. The existing tailings grade around 0.5 gram gold, and I think it's 37 grams of silver, so it's better than 1 ounce silver per ton. It demonstrated themselves to be amenable to cyanide leaching. First Majestic did some preliminary work on them that showed 80% recovery for the gold, 70% for the silver. I did some work on it with Genco. And I think we can probably improve on that. It's all dependent on solution strength and how much time it has to spend in the tankage. But we're going to be definitely examining those and be applying for a leaching permit in the near future. Next slide, please. One of the things that really attracted me to Guitarra to begin with was not only the bulk tonnage opportunity here, but just the fact that it's the Temiscaltepec district, of which we now own 100% of, was one of the most significant districts during the Spanish colonial era. In fact, in the 1600s, it was one of 6 districts that the Crown appointed a overseer to because the Crown wanted to make sure they were getting their share of production. And at times it accounted for up to 10% of the total production coming out of Mexico. We've started a district-wide mapping program, starting in the East District, focusing there first. And we've already now mapped over 40 kilometers of mineralized veins and breccias. I've got 3 of the best mappers I've ever had working for me on this project. And so we're making some real headway on that. So it truly is a very near-term production opportunity, of which we plan on ramping it up, coming at 300 tons a day, then move it up to the 500 ton a day capacity. After that, we'll look at expanding the mill, and hopefully we'll have our cyanide permit so that we can convert to cyanide, which will give us a big boost in the overall economic recoveries. So we've got that into things going on. And then as soon as we're in production, we'll use the cash flow to finance drilling over in the Eastern District and bring online a couple other mines over there. I'd already developed the Mina de Agua mine while I was with Genco, and we were actually hauling development ore from that then. So that'll be kind of our 4th production center coming out of it. So there's a lot of exciting opportunities here. Like I said, this is, I think, the most unique opportunity in the junior space at this point in time. With that, I'll turn it back to you, Alex.
Great. Thanks a lot, Greg. So there's already a question in the chat wondering why First Majestic sold the mine to us. I guess there's a couple of reasons. First off, as Greg mentioned, during production, it was about 1.2 to 1.5 million ounces a year annually. So it was a smaller number compared to San Dimas, which is doing that monthly, where Lagatar was doing it annually. So they really weren't getting much of a benefit for it for the shareholders. They're a massive silver producer. So this was just a smaller mine. Having said that, the purchase price, as you can see here, was 35 million US, but that was all in shares. They didn't take any cash. They wanted shares because they still believe in the mine, and they believe in the vision of ourselves and Greg and the team to kind of push it forward to eventually, I guess, get credit or get value back for the mine itself. As I mentioned, at the same time, we raised $10 million, and that should be enough money to get us back into production. There's no promises on that, but as Greg mentioned earlier, with the equipment that we're finding, the shape of the mine, and an accelerated timeline, we could have enough money to actually get into production with the cash on hand. There is also a 2% NSR that was sold with a 1% buyback for $1 million US, which could be another funding mechanism down the road. Quickly on the share structure, as you can see here, market cap is approximately 65 million Canadian. First Majestic is by far our largest and biggest shareholder. They currently own 47.7% of the fully outstanding shares. They will be diluting down up to 19.9%. They will be dividending those shares out to their shareholders. So for us, we're going to be a company with 700 shareholders to thousands more, which is really quite exciting. First Majestic has a who's who of silver investors, an incredible amount of retail shareholders, also some of the biggest silver funds in the world. So our share registry will change quite a bit, which is truly exciting. We'll also be able to market to these people. They'll be getting shares of Sierra Madre, and we can eventually tell the story to them. Outside of that, management and founders are still over 21.1% of the issued and outstanding shares, which is really high for a company of this size. Of that 10 million we just raised, over $1 million came from management. That's Greg, myself, and a few others. Our institutional shareholding went from about 4% to above 11%. So we brought in some new funds that are, I guess, excited and believe in the opportunity that we have before us. And with that, we'll start to take a look at any questions that you might have.
I see somebody asked what our timeline is for going into production. Like I said, given the state of all the equipment we have, we've hired 3 mechanics, a welder. We're already rebuilding all the equipment necessary to get us into production. We will need a stope master, but the lead time on that is fairly reasonable. So the first timeline is basically we've got to complete a resource study, and I'm shooting for 6 months on that. Time we complete that, we'll get a mine plan out, hopefully within 2 or 3 months after that. We'll have a costing study going on this entire time because we have all the production records from First Majestic's operational period. I still have all my records from the Genco period. So I think we basically know how much this is going to cost. We'll go out and we'll get all the bids on the consumables and everything to get the prices current. So unlike other companies that have to do this guesstimate, if you will, with a feasibility study, we've already got a developed mine. We've already got a plant already built. We have all the operational records on the plant. So it's going to be kind of a unique situation here. But no, we want to have this thing in production in a year to 18 months. And then the idea is to just gradually, incrementally ramp up the production. Hopefully we'll get that leaching permit, which will significantly add to the bottom line. But within 3 or 4 years, we want to be up to 1,200 tons a day, 1,500 tons a day, which should give us that 3 million ounces a year. That'll put us in the mid-tier area. I mean, that was my objective with Genco. We're just going to approach it with a slightly different mining plan this time.
Yeah, that's right. And if we can get up to, 12 to 1,500 tons per day, as Greg mentioned, at a simple flotation, that's, 3 million ounces. But with the cyanide, we're getting close to that 4 million ounce a year production number. That's when things start to get interesting, especially for other majors. So if at any point somewhere to come along, as we always say, every share gets a vote. So we'll be, hopefully cash flow positive. What's amazing about this opportunity is we will be cash flow positive from month one. So once production starts, we shouldn't need to go back to the market. Again, we want to be pretty determined in terms of our mine plan and what we're going to be doing. So that's why we're taking things at a pretty good pace for the time being. Another question here is how involved First Majestic is as shareholders. They've been amazing. First off, their care and maintenance team was really great. They did everything in terms of permitting, water, local engagement, environmental work. We've actually brought on all 25 people that were part of the care and maintenance team. They've been nothing but helpful. They truly believe in this mine. It's one of those opportunities where they really didn't get an opportunity to explore as much as they wanted. And they feel that, Greg and myself and the rest of the team are the right people to kind of push it forward. So they've been extraordinarily helpful. It's First Majestic.
Yeah, and on the exploration front, that East District, again, was very prolific during Spanish colonial times. But as recently as the early 1900s, there was a mine there, El Rincon, that between 1911 and I think it was 1934, they were producing only 100 tons a day, but it was grading 6.6 grams gold and well over 800 grams silver. So that's the kind of prize we're looking for over in the East District, is another couple mines like that we can add to the whole mill feed mix.
I think that looks like that's it for the questions. I did have one or two short ones myself. One is, you mentioned a permit for leaching. Anything required otherwise for production in terms of permits? No.
We can start tomorrow with the permits we have now for the flotation plant. So no, it's up and ready to go. I want to look at paste backfill, which will require a modification of the permit. We don't need that to start mining. But if we do this bulk mining long hole concept underground, it'll be kind of like a gigantic shrinkage stope. I'd like to be able to put the tailings back in for stability purposes, but we're not going to do that unless we get the leaching permit. They're too valuable a resource just sitting there on surface.
Right. Sure. The other thing I'm wondering about is maybe it's too early, but all-in sustaining costs on, and the two metals would be mainly gold and silver, I'm assuming?
Yeah, it's about 60% silver, 40% gold. It all depends on what the price is on a daily basis.
And all-in cost, let's say silver byproducts?
I would just, until we get our studies done.
Too soon.
I'm just guessing, but I think in the low teens, I think can be expected.
Excellent. Yeah, that sounds like a quite a profitable operation. Well, Alex, Greg, thank you very much for that. I think we've certainly covered a lot of ground and certainly dealt with a good handful of questions. Thank you for all of that. And I guess we'll now move on to our next presenting company.
Thanks, Peter.
Thank you, Alex. Thanks, Greg. Next up is Metallic Minerals. And we have Scott Petsel, who is president of Metallic Minerals. Metallic has a couple of really exciting projects going and some really interesting developments very recently that I'm not going to take anyone's thunder away. So I will let Scott tell you all about what has been happening lately at Metallic Minerals. Scott, the floor is yours.
Thank you, Peter. It's great to be here today, and it's been a really high quality of presentations throughout the last couple of hours here, and hopefully we can finish strong with Metallic Minerals as well and maintain that level of quality. Metallic Minerals is a precious and base metal exploration company with key assets in North America. And I'll tell you a little bit more about those as we go, of course, but I should start by, advancing my slides and mentioning that I will be making forward-looking statements and to use caution and to do your own research. I also want to mention that Metallic Minerals Corporation is part of the Metallic group of companies, which is a collaboration of independently traded exploration companies that includes Stillwater Critical Minerals. Stillwater just came to market with a major announcement for them that Glencore has made a 9.9% strategic investment in them to help fund their exploration on the Stillwater West project in southwestern Montana, the famously productive Stillwater district, where they're building a resource of copper, cobalt, nickel, and PGE mineralization next door to Sibanye Stillwater, and their active operations for those metals as well. The third company in the Metallic group is Granite Creek Copper, and Granite Creek Copper is focused on the Carmax deposit in the north central part of the Yukon territories. They're at a PEA stage. They've got a $330 million NPV on a 5% discount for their Carmax project that was put out in 2022, and they're working diligently to advance that. And very interesting group of companies that you should take time to look at, as well as Metallic Minerals. But again, independently traded exploration companies, we do share a common strategy and approach to business. We also share resources below our CFO level, and that allows us to save on our back office costs or administrative costs to run these companies. And it allows us to have a larger technical team that's shared across the three companies that is essentially now the size of those of a mid-tier producer. So we have a higher level of skill sets in our technical team as a result of that. So I'll talk a little bit more specifically about Metallic Minerals' key assets. And there really are three of them, although we have a couple of smaller projects as well. Our first key asset is our La Plata project, which is a silver gold project, precious metal rich porphyry system in southwestern Colorado. We're in April of 2022, we were able to announce an inaugural resource on the project of nearly 1 billion pounds of copper and 15 million ounces of silver included in that. I'll talk more about that in the next couple of slides, but we'll step over to the Keno Silver project as our second key project, which is located in the Yukon territories. It's a high-grade silver lead zinc project in the center of the Keno Hill Silver District, where we own 171 square kilometers, 100% ownership of that project, next door to our brownfields neighbor, Hecla Mining, who is the third largest primary silver producer in North America, or in the world, and is actively working in the Keno district to restart their Keno Hill operations by September of this year. The district itself has over 300 million ounces of existing resources and historic production. And we are working on 5 current advanced stage targets that we expect to come to the market with inaugural resources by the end of 2023. We've also got 40 other targets that we think are significant exploration targets that can grow and become new discoveries or become eventually resources that we can add to that inaugural resource total in the future. Our third key asset is our alluvial production royalty portfolio. We are the 3rd largest landholder of alluvial claims in the Yukon territories, where famously in the Klondike district, over 20 million ounces of gold has been produced. We announced a new royalty agreement in January of 2023 with Parker Schnabel, who is, I guess, semi-famous from Little Flake Mining, from the hit TV show Gold Rush on the Discovery Channel. Parker is a serious operator, and he's won environmental awards, and he is expecting to produce between 5,000 and 10,000 ounces of gold on our project this year, and we will retain a 10 to 15% royalty income from that production this year as well, to help supplant or help our back office expenses and also supplant exploration as we go forward. There is the ability with our land holdings to expand that to 10 plus operators and really grow that production royalty portfolio significantly, with the upside of perhaps funding our internal exploration or funding exploration internally as a benefit on our other key projects. So let's talk about the La Plata project. Again, it's in southwestern Colorado at the southwestern end of the prolific Colorado mineral belt, which includes a couple of major producers, Freeport-McMoRan, working on molybdenum deposits at the historic Climax and Henderson mines, and then Cripple Creek mining gold on their 30 million ounce gold deposit there in Colorado as well. So I think it's really significant. Not only do we have big players in the district, but in the 2022 Fraser Institute survey of mining CEOs, it was ranked 5th globally for investment attractiveness around the world globally. So I really think there's a perception of Colorado as a great place to work, and that's what we're seeing, and that's why we're there. As I mentioned, we announced our inaugural resource in April of last year. A little bit of the history behind that. Silver was discovered in the La Plata mining district in the 1700s by the Spanish explorers. Mom and pop operators came into the district and produced small mines from high-grade silver gold telluride vein systems. All of those mines were shut down in the 40s by the War Powers Act. And after the war, the majors recognized that there was a copper ore body in the middle of the district controlling a lot of these vein systems that the small timers were mining on, and they began exploring that copper deposit. These companies, Rio Tinto and Freeport-McMoRan, are the progenitors of those companies, did a modest bit of exploration in a very divided land package at the time. And because of the low copper prices in the late 70s, early 80s, they really stepped away from the district. And the district has largely been forgotten until today. And we acquired the project in 2019, done confirmatory exploration work on the existing work that was done by the majors to announce this resource, but also systematically explored the project and see the great potential to grow the project with respect to our 2/3 ownership of the district. The key thing that happened in 2022 following the announcement of the inaugural resource was the drill program that ensued to expand that resource. And we drilled 2 holes laterally to the resource. This is the primary resource area here. And you'll just note that these are drill holes that have been projected to surface, and that the pinks and the reds Our high grade and the greens and the yellows are lower grade, or greens and blues, and that this hole is actually below these two holes and was the second hole of our 2022 program where the results of this drill hole were in the top 2 or 3 holes in North America in the copper space in the last couple of years. So we had 816 meters of continuous mineralization at 0.41% copper equivalent grade. And as you can see, it got better down hole. We had some zones that ran well over 1%, 50 meters and above. And at the end of the hole, we ended in really significant high-grade mineralization, 5.2 meters at 5.4% copper equivalent, including 2.5 meters or 2.5% copper, 18 grams silver, 5 grams combined gold and PGE over those 5 meters. The hole ended due to technical difficulties with the drilling. We're excited about the idea of coming back and continuing to expand that drilling, but it really is wide open around it. And so we're really quite excited about the ability to grow the resource from this drilling that we're planning in 2023, which we're calling a phase 1 program that should be around 5,000 meters of drilling to follow up on this hit. This drill hole is really what excited Newcrest to come in at a 9.5% equity investment in the company. They are well experienced in these types of deposits, recognized immediately when the results came out that this was something significant, and we began negotiations regarding the investment. The $6.3 million in capital that we've received from this investment is going into exploring that phase 1 drill program at La Plata. The investment announcement also comes with warrants, which could provide an additional $6.5 million in proceeds at a 55-cent full warrant price within the next 3 years. So we're really excited about working with Newcrest. They see the value in what we've done. We're not only receiving the cash to do the exploration, but we see great value in this combination of our technical teams through a technical committee where we're already tapping into the experience that they have in these types of deposits. And I mentioned that these precious metal porphyry systems, specific to this project, is an alkaline porphyry system. These are really some of the world's largest precious metal and copper producers in the world, and they really are the engines for these major miners, cash engines for these major miners. We can see on this list some really big deposits: Bingham Canyon, just up the road from our La Plata project in Utah, and then the two that Newcrest is actively exploring at Cadia, or mining at Cadia, and working on gold, Wafi Golpu in the Papua New Guinea as a development stage project with these significant resources. And then finally, Galore Creek, where myself and our CEO chairman, Greg Johnson, were co-founders of Nova Gold and helped develop and explore the Galore Creek deposit to sort of this scale of deposit, which has now attracted the attention of Teck and Newmont as they work to develop that. And we see a very strong analog to that at Galore Creek in terms of deposit style and the ability to scale that deposit to something similar to what we see at Galore Creek. But the existing resource is not the only thing that we're focused on. We, as I mentioned, we have in our control probably 2/3 of the district. And this is a remote spectral image of the district where you can see this lighter color representing alteration from the intrusion of the porphyry system, expressing its effects on the host rocks by altering those rocks. And the spectral imagery colors those clays from the alteration in lighter colors, whites and yellows, as opposed to the blues and greens that you see in the background. So this represents the footprint of the intrusive system. and represents opportunity, because everything that I've just mentioned in terms of the resource, our new drill holes, our existing focus has been within this circle. And we're seeing 2% copper on the backside of this ridge in outcrop that has not been drill tested. And typically these systems come in multiples. So we expect to see a lot of potential to grow this thing and make new discoveries as we go. So switch over quickly to the Yukon and talk about our Keno Hill project, Keno Silver project, located in the north central part of the Yukon, where we find great infrastructure and great people, a great community of miners in a district next to Hecla, next to Victoria Gold, who's producing gold at their Eagle mine, next to Banyan, where Gwen talked about the significant resource that they put out here recently, gold resource. And then with Hecla coming in and restarting operations at the Keno Hill project, has brought a new light to the district and helped us propel our work in going forward and shine some light on what we're doing as well. Hecla completed the acquisition of what was then our neighbor, Alexico Resources, in September. They are intent on restarting their mill and mining operations by September of this year. The key thing I think to note is that they've only got 8 years of mine life in their reserves. They're actively exploring, but a lot of their exploration is deep underneath some of these discoveries they've made at the Birmingham mine. What we represent is the opportunity to make discoveries and add resources that are shallow. We're finding near surface, should have lower development costs and be attractive from that component. So the key thing you might see in this slide is the mill is fairly small. Well, that's because it really is one of the highest silver grade districts in the world. And this is a chart that shows the peer global primary silver producers by grade. We're up here in the second column. And then there's a ranking of the political risk of the jurisdiction. So not only do we have high grade, we're in a great place to do mining. Our Keno Silver District map here shows the location of the Keno property in green, the Hecla's ground in green, metallic minerals ground in orange, historic producers in orange, current resources held by Hecla in yellow, where they're working to start their mining operations, the Hecla Mill complex right here in blue, and then the areas where we're going to be adding resources or announcing those resources before the end of the year are circled in red at our Formo, Nabob, Caribou, Fox, and Homestake targets. Additionally, all of these blue worded target names are prospective new discoveries or advancements towards resources in the future. And we're actively working to rank those deposits and make those new discoveries as we go. One significant thing I want to mention is our Fox target here in the Keno East area is a new discovery as of 2020. It's a sheeted vein system up to 177 meters wide of more modest silver grades, but in a very shallow dipping environment as a potential open pit with significantly reduced development costs. So over the last several years, Metallic was formed in 2016. We've been very systematic about evaluating projects, buying into projects in low price cycles, doing systematic work. We're generating great results, putting out new resources, and we expect to continue that very diligent work as we go forward. We've got some significant catalysts this year, including announcements on our 2023 exploration programs. We expect to have an updated La Plata resource based on the drilling that was done in 2022. We expect to have an inaugural 43-101 resource at our Keno project and more news on alluvial production royalties. And then hopefully in the early fall, we'll have our first results of our 2023 drilling, particularly at La Plata, which should be starting soon. Our capital structure Around a 30-cent stock price today. We've got 167 million shares issued and outstanding. No debt, 7.5 million in cash following the investment from Newcrest. And management owns 17%, 17.5%. Newcrest is 9.5%. And then our largest individual shareholder is Eric Sprott, a real silver bug that sees the potential of our work at Keno and sees La Plata as optionality. So a pretty good balance sheet, a fairly good investor group. And I think in summary, what I would like to say is that I don't think you see many $50 million market cap companies with two essentially tier one assets with great growth opportunities and an income stream from the alluvial portfolio, production portfolio that can supplement the exploration and minimize dilution. So not only do we have great projects, we've got a great team, and we're well situated for growth here in the future. And that's it. Thank you very much.
Well, Scott, thank you for that great overview of metallics. Certainly, as you said, some exciting projects, some top-notch projects right across the board, all three of them. And we do have already a couple of questions, so why don't we get to them? The first question is for La Plata. When do you see the start and end to drilling? I'm assuming that the question is for this year.
Well, we're gonna be starting very soon. Within the next couple of weeks, we're starting to mobilize the drill now. It was a heavy snow year on the project this year across the Rockies, and so that's slowed us down just a little bit in terms of our start. But once we get started, we're planning on a roughly 5,000 to 6,000 meter phase one, and phase two will in part be based on the results of phase one in terms of how we focus it. But if we move into a phase two, we'll drill right up until November or December, likely.
Okay. A question I had that's related is, what does the metals mix look like at La Plata?
Well, the interesting thing is, when we have looked at hole 2204, which is our big hole from last year, that 816 meters of 0.41% copper equivalent, it looks like, it's largely a copper deposit, but the precious metal component is 50% of that. And the idea, the interesting thing that's come about is, historically, Rio Tinto and Freeport and the drilling that was done on the deposit was largely focused on copper, and there was some sampling for silver, but they did not historically sample for PGE or gold. And we think with more work that we should be able to really not only upgrade the resource tonnage, but to improve the grade significantly by continuing to look at these, the content of the gold and the PGE mineralization, as well as the incomplete silver sampling across the deposit. So it's really significant that these precious metals are there, and in part that's what's drawn Newcrest in as well.
Okay, something that comes to mind for me as you're explaining this to us, and we're talking about drilling at La Plata, is over this, let's say at least this first phase of 6,000 meters, how much will you be stepping out from your initial discoveries?
Well, I think what we're going to do is we're going to essentially do a 4 or 5 spot around 2204 to really test the ability or the continuity of that mineralization, and to try and get all the way through the system. So if you remember, one of the slides we showed, the end of the hole ended in mineralization, the 2 holes above it also ended in mineralization. So our effort is really going to be to try and test to see the full breadth of the exploration potential and the width of these intervals. And we'll stay fairly close because, at those grades, particularly with that precious metal content, we don't, if we were able to define another 100 million tons or 150 million tons of that kind of grade with that metal content, we would really be in business in terms of a potential block cave operation. But I think there's much greater upside. We just need to focus on making sure we have some continuity of what we've discovered in this new fluid source.
Excellent. So the next question we have is asking, do you drill Keno this year, or is the focus going to be on La Plata?
The focus, well, the investment from Newcrest was really earmarked for exploration at La Plata and corporate expenses. And so that is going to be largely the focus of our exploration work this year. But we do plan on having an exploration program at Keno. It is still a key project for us and a very important one. And we can do a lot with not very much there. And so we'll use money that we had prior to the Newcrest investment, plus income from our alluvial royalty production. And then we'll be opportunistic when the markets come back to us on funding and determine the appropriate scale of exploration work at Keno here in the very near term. But it's probably going to be a later season program.
So do you foresee for now any drilling at Keno, or is that something that okay? And can you give us an idea of the number of meters approximately?
Not yet. I think that's yet to be determined, but there will be drilling at Keno this year. Okay, excellent. It certainly is looking like an attractive area to look for silver, given what's transpired in the last year or so with Hecla. I mean, Hecla obviously has been around for a long time. We're talking about very high grade mines. My understanding is that they had their eye on Alexco for quite some time, and we're waiting for the right opportunity. What's it like? Can you speak to some of the potential from a couple of aspects up there in the Yukon, both from prospectivity as well as operating in the Yukon? Well, I think from the prospectivity side, this is just such an interesting district. And as we mentioned, there's been 300 million plus ounces of current resources and historic production in the district. And I think our CEO, Greg Johnson, and I both see the potential for this to be a billion-ounce district by the time it's all done. We've identified numerous 40 other targets, some of which have had previous drilling that positive results, and some of which have not been tested yet. And these are, vein deposits primarily, but the idea of having come into a district that's been explored for 100 years, step out a little bit to the east and make this discovery on a sheeted vein deposit, which is not the norm for the district, that could be produced as an open pit, is really a significant exploration success, and one that we're, as we learn more about what the deposit is, applying that model to areas that have not been looked for deposits of that style. And so the prospectivity of our project within a very prospective district is really strong. But you just think about how much metallogeny there is in the district with respect to Banyan right next door, and Victoria right next door, and Azarga, Mayo Lake Minerals, Strategic Minerals, all these companies that are working to develop resources within the broader Mayo Keno mining district is really substantial. And there's a lot of support for that. There's infrastructure available and power available for us to build these mines out when we're ready to do that, or when whoever our partner would be ready to do that is. So. Is there are there upgrades that are taking place in terms of infrastructure in the area? Well, I think what you're seeing a lot right now is that Hecla's put a lot of money in the last year, essentially, or less than a year since their acquisition, to really upgrade their facilities and upgrade their ability to mine in those mines. And that in itself has been significant. So. I'm curious too about, I guess if we go back for a moment to La Plata and then this deal with Newcrest, just, something that comes to mind is that obviously Newcrest
it was in its own deal recently with Newmont. And does that in any way potentially affect their investment with you, or can you speak to that a little bit?
Well, I think, the one thing is, in terms of our discussions with Newcrest on that, the team that we're working with are kind of unaware of really what's happening at the highest levels with respect to that, Newmont-Newcrest deal. And I think everyone's impression is that we know Newmont is interested in increasing their revenue, a share of their revenue from copper production as a critical part of their growth strategy going forward. They know these big deposits are prolific producers and can have significant precious metal to add to their gold production as well. So they have rightly seen Newcrest as probably the best in the business at these types of deposits with low producing costs, block cave, underground mining scenarios with copper, gold, and other precious metals. And I believe that they will want Newcrest, who has been so efficient and good at what they do, to operate as Newcrest and not go in and muck up the system, as they say. When you've got a good thing, you let it be a good thing and let it do its business. So we haven't seen any effect of the Newmont deal at this point, and I don't expect to. And either way, with Newcrest headquartered in Colorado and working in Colorado, either one is a really good partner for us going forward.
Excellent. Well, Scott, we've certainly covered a lot of ground. You have, and I just wanted to, I guess we could wrap it up here. There are no pending questions, but maybe if you want to take a minute to kind of give some last few thoughts on metallic minerals before we wrap things up.
Yeah, I'll just say again, we've got a great team working on advancing these deposits. The markets are really rough, but we're really well situated for continued growth with not only our two key assets at La Plata and at Keno, but also to have income to help us through these downtimes and to help supplement our exploration activities. Really well positioned, and it's surprising that we're only a $50 million market cap company. So hopefully when the markets return, we'll see some love, and we'll be one of those on the list that Gwen talked about earlier, that people will come back into when the market does turn.
Great, thanks again. So with that, I think we can pretty much wrap up today's webinar. We had some great presentations from Gwen, Sanu, from Azimut, from Metallic Minerals, as well as from Sierra Madre. I'd like to thank the Metals Investor Forum for doing a great job of organizing and hosting this event. And certainly look forward to the next time around. Thanks to everyone, and hope to see you all again soon.
Thank you, Peter.